In this video, we'll see the computation of aggregate turnover. You all know the relevance of aggregate turnover in GST. If the aggregate turnover exceeds rupees 40 lakh, then GST in case of supply of goods, then GST registration is mandatory. In special category state, the same is 20 lakh. If the aggregate turnover in case of supply of services exceeds rupees 20 lakh, then GST registration is mandatory. In case of special category state, the same is 10 lakh. You are eligible for composition scheme only if the aggregate turnover is up to rupees 1.5 crore and in special category state 75 lakh. In case of supply of services, if the aggregate turnover is up to 50 lakh, then you are eligible for composition scheme. If the aggregate turnover exceeds rupees 5 crore, then e-invoice is mandatory. So let's see what are the items to be considered in computation of aggregate turnover and not to be considered in computation of aggregate turnover. First, taxable supplies is to be included in computation of aggregate turnover, taxable supply of goods or services or both. Further, exempt supply. What is exempt supply? A supply which is taxable but rate of tax is nil. A supply. Second, a supply which is taxable but it is wholly exempt by of exemption notification under section 11 of the CGST Act or section 6 of the IGST Act. And exports or supply to SEZ unit. These are zero rated supplies, but these to be included in computation of aggregate turnover. Further, a non-taxable supplies. Non-taxable supplies are the supply of which is not leviable to tax under GST. What are those supplies? Alcoholic liquor for human consumption, petrol, diesel, natural gas, all these are non-taxable supplies. Then your GST registration is state specific. However, aggregate turnover is to be calculated considering all the registrations. That is, aggregate turnover is on pan-India basis. Let's take an example that you are having an office in Delhi, another office in Rajasthan. Both the unit sales is to be considered while computing aggregate turnover. Not only this, a branch transfer. That is, suppose in the same example, a Rajasthan unit supplies goods to Delhi unit. The legal entity is same. Two different GST registrations. They are called as a distinct entity and that is to be considered in aggregate turnover. Rajasthan unit can supply to Delhi unit only on the basis of the invoice and not on delivery challan. Okay. Okay, this will not come as a turnover in financial branch transfer, but this will come as in computation of aggregate turnover. Then in case of job worker, a basic value of the goods will not be considered in aggregate turnover, but in case of job worker, job work charges is to be considered in the aggregate turnover. Then outward taxable supplies liable to reverse charge. For example, let's take an example that in case of a GTA service, the GTA service provider opt for 5% RCM. In that case, a recipient pays the taxes on the GST, pays the taxes under RCM. However, is to be considered as in the aggregate turnover of GTA service provider and not in the turnover of recipient. Recipient is just paying the taxes under RCM. It is on behalf of supplier because he is more organized. So supplier is not paying, but you are paying the taxes. That does not mean that it is to be included in aggregate turnover. It will be included in the aggregate turnover only in case of of the supplier, that is a GTA service provider in our case. Then what are the items to be excluded in computation of aggregate turnover? One, inward supplies liable to reverse charge. Just we discussed that a recipient is paying the tax on behalf of supplier. That will not form the part of aggregate turnover. Then very important is transactions under Schedule 3, which are covered under Schedule 3. Schedule 3 of the CGST Act, the transactions, the activities are neither supply of goods nor supply of services. Therefore, they will not form the part of included in the aggregate turnover. What are those transactions? One, high C sales. Then supply of goods from non-taxable territory to another non-taxable territory without goods being entering into India. And supply of warehouse goods, that is called as bond to bond transfer. What is high C sales? Let's take an example that there is a who is in India. He imported the goods on voyage. He is having a symbolic possession of the goods by a document of evidence is called as a bill of lading. Before the goods entered into India, he endorsed those in favor of assume B. Then it will not form the part of aggregate turnover of A. He is also not required to reverse the input tax credit, common input tax credit under Rule 42 of CGST Act. Okay. Then supply of goods from non-taxable territory to another non-taxable territory without goods entering into India. Let's take an example. There is a in India. He purchased the goods from Singapore. He asked Singapore supplier to directly deliver the goods to his customer who is in Dubai without goods entering into India. Then it will not form the part of aggregate turnover of A. However, this will be a turnover in financial, but still this will not be a turnover, aggregate turnover of A, and there is no need to reverse the input tax credit under Rule 42 of the CGST rules. Okay, let's see two examples on computation of aggregate turnover. First example, sale of goods, taxable 35 lakh. Trading in natural gas, this is non-taxable supply, 95 lakh. Goods sent to job work, 7 lakh. GTA service received, 5 lakh. RCM is paid by the recipient, that is you have paid the RCM. Goods imported, sold before entering into India. This is what? High C sale, 60 lakh. Commission received, taxable service, 3 lakh. Let's see the answer. Sale of goods taxable. It's a taxable supply very much included in the aggregate turnover, 35 lakh. Trading in natural gas, it's a non-taxable supply, but even if there is no levy, it will be included in the aggregate turnover, 95 lakh. Goods sent for job worker. There is no supply, there is no sale. It is sent for further processing to the job worker on the basis on delivery challan. There is no sale. So it will not be included in computed. It is not a sale. There is a question of including or excluding from aggregate turnover. Then GTA service received, RCM taxes paid. GTA service received is a inward supply. Inward. You paid on behalf of that GTA service provider. It will not form part of your aggregate turnover. It will form part of GTA service provider's aggregate turnover. Goods imported, sold before entering into India is a high C sale. Such Schedule 3 transaction not to be considered in computation of aggregate turnover. There is no need to reverse the input tax credit also under Rule 42 of CGST rules. Remember this. Then commission received, 3 lakh. Taxable supply of services to be included in aggregate turnover. So what is the aggregate turnover in this case? 1 crore 33 lakh. Okay. Let's see one more example, little tricky. Sale from Delhi office, 45 lakh. Sale from Haryana office, 1 crore 35 lakh. Goods purchased from Singapore directly sent to the customer in Dubai without goods entering into India, 70 lakh. However, that is included in the turnover of Haryana office. Sale to ACZ unit included in the Haryana office, sales 25 lakh. Goods received for job work. You received the goods for doing the job work. You are a job worker. 75 lakh basic value of the goods. You avail advocate service, paid RCM of rupees 1,20,000. Advocate's fees 1,20,000. Interest income on FD 3,25,000. Job work charges 5 lakh rupees. Let's see the answer. Sale from Delhi office 45 lakh. Straightforward include in the aggregate turnover. Sale from Haryana office 1 crore 35 lakh minus schedule 3 transaction, that is goods received, goods purchased from non-taxable territory supplied to another non-taxable territory without goods entering into India 70 lakh. Exclude that. It is included in the turnover of Haryana office, therefore we are reducing it. Goods sale to SEZ unit, zero rated. It is to be included in the aggregate turnover. It is already there in the Haryana office sales. Therefore, we are again not adding that. Okay. Goods received for job work. This is a basic value 75 lakh. Is not to be included. Only job work charges. See the last 8, serial number 8. Job work charges 5 lakh rupees to be included. Not the basic value of the invoice. Advocates fees paid 1,20,000. On that RCM is paid. It is not your turnover. You just paid the taxes on behalf of service provider. So, and one more. Rule number 7. Interest income on FD. Interest income is what? Exempt supply. Exempt supply to be added in computation of aggregate turnover 3,25,000. One tricky question. So, before that, what is aggregate turnover? 1 crore 18 lakh 25,000 is a aggregate turnover. Now, one point I want to mention here, that in case of interest income, which is exempt supply, interest income where the consideration is against loan or FD, is to be included in the aggregate turnover. However, for computation of aggregate turnover in case of composition scheme under section 10, to see the threshold whether it is crossing 1.5 crore or 75 lakh, as the case may be, you should not consider interest income. Whatever is the amount of interest income, that will not form the part of aggregate turnover in case of computation for eligibility of composition scheme. Tricky, small point but important. Okay, this is my contact detail. If you are having any questions relating to GST, you can very well reach to me. There are many YouTube videos are available. Please watch them, face the exam with confidence, and come out of the exam with flying colors. Thank you.